Hello traders, welcome to another video on this channel. So in this video, we'll be talking about internal structure, how you can trade internal structure and how you can be profitable trading internal structure. So without wasting any of your time, let's take a look at the chart. So on our screen here, we have this example of a bearish market. What you can see is price is creating this lower, this lower highs, lower low, lower high, lower low, lower high, lower low, and this lower high. And this is how normally price moves in the market, right? So now marking our structure, if it comes to marking our structure, we identify our inducement zones. As we all know, the first pullback is called inducement, that is inducement. This other one is also inducement. We have inducement here. So for you not to be confused, which is inducement, right? The first pullback, you see that price moves here, creates this lower high here. Then when it takes out this lower high, we mark the high here as our inducement. Now we wait for price to go above the high. And when price goes above the high, now it breaks structure. We have a valid break of structure. This is our valid break of structure here. This is our level of inducement here. Now, after after price break this valid break of structure. Now, what you are looking for here is for the first pullback within this leg we take out. When price start retracing back up, you are waiting for the first pullback that was created on this leg here to be taken out. Now, in this case, our first pullback is here, which is called inducement. Once our first pullback is taken out, we can start now waiting for price to close above here, to close below, so that we can get our valid break of structure. Right. Now, here you can see that price successfully closed below here. Now we have this our valid break of structure here. This is a valid break of structure. Now, this leg now we see where was our last pullback. This leg when price started retracing, we had this last pullback here, which acts as our inducement, and we have our break of structure. Now, where is our our internal structure in this case, right? Let me show you this zone. This zone here. This is what is called our. This is our internal structure. Here we have this internal structure here. We also have internal structure on this leg, but we'll be concentrating on this one. So we also have this one. So now, how do you spot this internal structure? You see, basically, what is happening when the market is going down like this is the very thing that will be happening within this zone in medium time frame. So if this was your 4 hours, you move forward to the 1 hour time frame, you see this very type of structure in this zone here. You see this very type of structure in this zone here, and also you can check other structure. What you need to know is where is my higher time frame bias? Where is the market heading to? Where are my higher time frame points of interest? So that make sure that you don't target, you don't buy internal structure here and you put your stop loss above here. You know that obviously you don't hit because price will reverse somewhere around at the extreme. If the worst comes to the worst, price will reverse somewhere around here. So knowing your higher time frame structure is very, very important to avoiding this type of scenario. Normally, when you're trading on a lower time frame or when you're trading internal structure, it's advisable to target your level of inducement. Target your level of inducement because when you're trading on a lower time frame, your your winning rate is already low because you're counter trading. So when buying on this small time frame, make sure you follow this very structure in a bigger time frame. But you follow this very structure in a bigger time frame. and you use this very method that you use in a bigger time frame to mark the structure here in a medium time frame if you are trading internal structure. So it's very important you take note of where you are in the market so that you will not get stopped out. You should take note what are you trading in the market when you are looking at structure. Are you trading according to the higher time frame POI, or higher time frame structure, or you are trading internal structure? So knowing this will differentiate how you set your targets and how you set your stops. So guys, before we continue, please, if you are new to this channel, subscribe, like, comment, and leave you can leave a comment on what you want us to cover next. So if you are still struggling with trading, you can join our Telegram group. I send free setups there weekly, and you can be learning while earning. So check out the description of this video, and don't forget to subscribe, guys. Support me. Let's push this channel to 5K. So let's continue, right? So as earlier said, when the market is trending down and you want to buy here, right, you should consider that you are buying at internal structure. So you should set your targets within your internal structure. Don't set extraordinary targets when you're trading internal structure. If let's say you were selling, now you're selling at this zone, now you can set this type of targets. But if you are buying here, make sure I set smaller targets and you use your risk management correctly. So without wasting any of your time, let's go into the charts. Then I will show you how the internal structure really works in the charts. So we continue with the New Zealand dollar. We continue with the Euro New Zealand dollar here. So moving over to here, we have our bigger time frame, our bigger time frame structure. You can see price takes out inducement, break structure here, takes out inducement, break structure here. Basically, this is how this is moving. This is how price is moving at this level, right? Now, as we earlier said, where is our internal structure in this case? Where is our internal structure in this case? You can see that we have this zone here. This zone here. After price broke structure, price started retracing to the upside. Now, during this internal structure, what can you be looking for? You may be looking for a buy, a short-term buy here. You're targeting this high. So now this is the 2 hours time frame. If we drop into a medium, into a smaller time frame, you see lots of structure here. So let's move over to the smaller time frame, keeping to account that we are trading within this internal structure here. We are trading within this range. So let's drop into the smaller time frame, smaller time frame. Then we mark out this structure here and show you how you could have executed if you would have been trading this internal structure here. Okay. Now, this is our smaller time frame point of interest here, right? Now, this is our smaller time frame structure. Sorry about the mix up. This is our smaller time frame structure here, and this is our internal structure in this case. Now, this internal structure, what indicated that we're going into an internal structure? We have this minor inducement here. This minor inducement here, it was taken out. Now, once this inducement is taken out here, we can start looking for our internal structure swing points. So after that inducement was taken out, price rallied up. Rallied when price rallied up now, gave us this internal inducement here also. This internal inducement here also. Then it gave us our SMT here. Then below here we had our point of interest. Then you can see that price tapped into this imbalance before this point of interest. This imbalance for this point of interest was filled 50%. So after price took out our inducement at this level in the internal structure, we started looking for our buys. So we got this nice point of interest here. This could have also served as another point of interest, and that could have given you enough, about maybe about 1:6 risk to reward here. So after price tapped into this our point of interest, we targeted this high here. So this is what your position here, if you were using a bigger, if you did not refine, this is how your position here would have looked like. This is how your position here might have been like. And you can quickly see here, this is already a quick 1:4 risk to reward ratio with about, let me see, with about 122 pips. Yes, with about 121 pips, right? Now imagine if you could have refined this, if you would have refined this, how many pips would you have gotten in this case? Now this internal structure is not for newbies. So if you're a newbie, I'm sorry, this needs a little practice. It needs a lot of practice before you can get this. Now you can see that after price reach this point of interest, we saw that price already tapped into this bigger time frame POI, right? So we still need to monitor the way price behaves. As you can see here, at our level of inducement here, we had our level of inducement here, and when price took out this inducement, it gave us this SUB here. You could have bought here, targeted this, but you make sure that your target doesn't go above this higher time frame POI here, right? So your target doesn't go above this higher time frame POI. You, now from this higher time frame POI, now when price taps into this higher time frame POIs and gives us a chalk like it does here, you can start looking for your sell opportunities to target the downside. So guys, that is how simple it is to trade internal structure. But make sure that you are very careful. This is not for beginners. I repeat, I know why I'm saying this, because this can be very tricky. If you know that you're a beginner or you're still struggling with structure, just stick to the higher time frame. It will help you a lot. It will help you a lot. So I hope you learned something from this video. If you did, please follow me, please subscribe and leave a comment.